Hello and a warm good morning. You're tuning to Market Cafe. I'm Ankita Saxena. In the next half an hour, I'll take you through all of that made headlines on the global front, the markets, and of course, the cues you need to watch out for before the start of the street. And first up, of course, the biggest news for the day is the FIFA World Cup finals. History has been rewritten. Crest. For more than 100 minutes, Spain's relentless pressing, composure and discipline kept Lionel Messi and Argentina at bay. And when the moment arrived, Ferran Torres seized it in style, scoring a winner in the 106th minute and clinching for Spain its second FIFA World Cup title. The victory also caps an extraordinary run for the Spanish side, who arrived as reigning European champions and extended their unbeaten streak to 38 matches over more than 2 years. Now, Trump also joined the medal and trophy presentation, while the leaders of fellow co-hosts Canada and Mexico attended the finale. Trump and the Infantino were booed during the ceremony. Beyond the game, one of the evening's biggest talking points was also the Super Bowl-inspired halftime show. Shakira, Madonna, BTS, Justin Bieber and Burna Boy took to the stage during an extended break curated by Coldplay's Chris Martin. All right, that is all from the football and the exhilarating match that we saw at the FIFA World Cup finale. But let's talk about the markets as well and how that shaped up. Well, let's take a look at the Wall Street. Now, remember, there are tensions on the U.S. and the Iran front that have escalated and that have sent the oil prices sitting up, racing past the $90 per barrel mark. But on Friday, how the Wall Street shaped up was that it ended in the sea of red. We did see cuts coming across. At least on Friday, Dow Jones was down 400 odd points, S&P 500 down 1%, and Nasdaq also, shut shop with cuts of 1.5%. And for the week also, we did see a sea of red coming in for the Wall Street. We had S&P 500 that dropped 1.6%, Nasdaq shut dropped 2.9%, and Dow Jones was down 0.9%. Additionally, VanEck Semiconductor ETF saw its third weekly decline in 4 weeks, losing nearly 9%. In fact, if the experts are to be believed, there is more drawdown in the offing for the semiconductor names, which are already seeing a sell-off in the market. And on account of that, we do see Nasdaq also declining with cuts of almost 3% in last week's trading session for the Wall Street. But let's talk about the crude prices. Like I mentioned, crude is on the boil. Brent is sitting above the $90 per barrel mark. It is right now, as we speak, it has climbed 2.5%. WTI is also almost touched $85 per barrel mark. 2.5% of an uptick is what WTI is also witnessing as of now. Remember, Kuwait has said that Iran has attacked their water desalinization and power plants, and on account of that, the tensions have escalated yet again, and there was heavy firing across, U.S. and Iran over the weekend, and on account of that, the crude is rising at this point. Let's take stock of how the Asian handover looks like. The Asian handover is mixed. Now, remember, Nikkei is shut today on account of a holiday, but the Chinese market, Hang Seng and Shanghai, both of them are bucking the trend and trading with gains of 1% and 2% respectively. S&P ASX 200 is absolutely flat in today's trading session, and the implied start to Nifty is also indicating a very directionless start to the week. 13 points cut is what we are witnessing. A very muted flat start is what we can expect to the Indian market as well. And it's a wait and watch as to how the markets really react, especially to the elevated crude prices. But on the geopolitical front, the United States has launched another wave of strikes in Iran after American troops were killed in attacks in Jordan and Iran, further escalating tensions in the Gulf. Iran responded with fresh missile and drone attacks targeting the U.S. assets and regional allies, while the conflict continues to threaten shipping through the Strait of Hormuz. President Donald Trump said that the U.S. had hit Iran very hard and vowed to prevent Tehran from acquiring a nuclear weapon. Let's go across and listen in.
Well, we feel very badly, but those great people, those great patriots were out there fighting that Iran cannot have a nuclear weapon. Iran has been very, very badly damaged. They've lost everything almost militarily. They've got very little left. They've got some missiles. They've got some drones. They've got some manufacturing ability, not much. We control the Strait. They don't control anything. So we'll see what happens, but we hit them very hard again tonight, and we did that in honor of the Probably three. It's probably three as opposed to two. Great patriots. This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. So it's really not the same thing. What we're doing now is we're ending any chance where they could have a nuclear missile. If you look at it, after a week and a half, not 4 weeks, a week and a half, 2 weeks, we stopped them from probably, but I don't want to have the word probably.
And moving on then, the shipping through the Strait of Hormuz is becoming increasingly risky as Iran steps up the attacks on commercial vessels, raising fresh concerns over the global oil supplies. Maritime security firms say tanker traffic has fallen sharply, with many crews unwilling to transit the waterway amid the fears of missile and mine attacks. The disruption comes as the US and Iran continue military escalation in the Gulf. And TSMC has reaffirmed strong confidence in the AI boom, saying the demand for advanced AI chips will remain robust for years. The world's largest contract chipmaker is increasing its Arizona investment by $100 billion, taking its total commitment to $265 billion as it expands U.S. manufacturing to meet surging customer demand despite the labor and infrastructure challenges. And South Korea is taking fresh steps to internationalize the won by further opening its currency market to foreign investors. Overseas financial institutions will be allowed to borrow won through temporary overdrafts and use of won-dominated bonds as collateral, as Seoul looks to boost global trading of its currency and deepen the foreign participation in its financial markets. And India has scripted space history. Sky Root Aerospace's Vikram 1 has successfully entered the orbit, becoming a country's first privately developed orbital class rocket to do so. Launched under the mission Agaman from the Sriharikota, the rocket placed its payloads into a 450 kilometers orbit, making India only the third country in the world with private orbital launch capability. The successful maiden flight marks a defining milestone for India's commercial space ambitions. My colleague Sumita is now joining us. She caught up with the management to know more about what's in store next. Let's go across and listen in.
So Vikram One, what happened yesterday was, the first time a private company has designed, manufactured, and brought the orbital class rocket to the launch pad, and successfully lifted off. And in the very first attempt, has put satellites into orbit. I mean, this is a feat of global importance, because the world needs more launches to space, and there's more demand for launching of satellites and less rockets which can launch them. An Indian company, is creating more access to space that is also aligns with India's ambitions to become like a very strong spacefaring nation in the world, and with the government opening up the sector to private players recently.
From next year onwards, we plan to achieve a launch cadence of one launch a month also.
And moving on, ahead of the monsoon session of the Parliament, which is scheduled to begin today, the government has proposed introducing 5 new bills, including the measures to amend the MSME Development Act and the income tax law. My colleague Prakash is joining us with the details of this.
Well, the monsoon session of Parliament begins today, and the government has listed key bills that are important from a business standpoint. In fact, the Income Tax Amendment Bill 2026 to replace the ordinance is on the agenda. The bill seeks to deepen India's sovereign debt market. You are aware of the fact that the government has already exempted the long-term capital gains tax and withholding tax on interest income for FPIs and FIIs investing in government securities. Now, the bill is part of the agenda for consideration and passes. Along with that, the Foreign Contribution Regulation Amendment Bill 2026 is part of the agenda. The MSME Development Amendment Bill 2026 focuses on improving the ease of doing business, is also part of the business list. The Viksit Bharat Shiksha Adhishthan Bill 2025, which was referred to the JPC, has been included, as the JPC report will be tabled in Parliament. Along with that, the Supreme Court Number of Judges Amendment Bill 2026 is also on the agenda, which proposes an increase in the sanctioned strength of Supreme Court judges from 33 to 37. So these are some key inclusions. In fact, the monsoon session of Parliament is likely to be very stormy amid various political developments. Opposition parties are expected to raise the need paper leak issue. However, the much-talked constitutional amendment bill is not part of the agenda so far. Let's see how it pans out. and it will be interesting to see how the government manages the floor of the House during the monsoon session of Parliament. Back to you.
Let's move on and talk about all the stocks that will be in focus in today's trading session. And for that, my colleague Meryl is now joining us. Meryl, take us through all the stocks that you've picked out for us.
Yes, these are some stocks which are expected to be in the spotlight today on the back of their first quarter performance. Starting with Tatva Chintan Pharma and Chem, which is likely to be in focus after reporting a robust set of first quarter numbers. Revenues have climbed 43% for the company. EBITDA has almost doubled. EBITDA margin also surged by almost 480 basis points. And net profit for the company has surged 142% on a year-on-year basis. So we've seen quite a sharp improvement in the company's profitability this time around. Bansali Engineering Polymers has also reported a strong quarter. Revenues grown 53%, EBITDA rose 58%, and profit has increased 44%, indicating towards a strong surge in operating margins for the company. Among real estate names, we've got Kolte Patil Developers posting a healthy business update as well. Sales have stood at 617 crores for the company, with collections jumping almost 30% on a year-on-year basis. Average realization as a metric has also improved sharply, indicating that the company has seen positive, healthy pricing power in this quarter. Oberoi Realty has delivered strong operational update as well. Revenues and profit have both seen up 32% and 29%. One caveat to note, however, is that both numbers have come in below street estimates and lower, but however, we have seen some positives. Lower finance costs has been supported by margins, while the company's residential, commercial and hospitality business has seen strong demand throughout. In the cement space, JK Cement has reported better than expectation quarter. Strong sales volume, higher realization and ramp up of its central India capacities have helped drive almost an 18% growth in its grey cement volumes, making it one of the stronger performers in this quarter and an important one to watch in today's trade. And finally, Canfin Homes has reported more of an inline to a neutral sort of quarter. Loan growth has remained healthy and margins have improved on a year-on-year basis, but there has been a sequential moderation in the company's disbursements and profit, which are keeping the overall performance broadly neutral. So yes, these are some stocks that are going to be important to watch in today's trade.
All right, let's move on and go across to Ashesha, who's standing by with another list of stocks and news. Ashesha, take us through your list.
Let's also talk about a couple of other stocks that will be in focus. Let's talk about Reliance Industries first then, and the QIP has closed. The company has informed the exchanges about the QIP, and the company also said that the allottees include BlackRock Global Funds, ICICI Prudential Funds, among several other domestic mutual fund houses. So Reliance Industries in focus on the back of that. Shifting focus to Landmark Cars, a stock that has risen nearly 20 to 25% after the company reported its operational updates for the quarter gone by. And we have ICICI Prudential Mutual Fund, which has sold about 1 lakh shares. But on the flip side, we have Helios Mutual Fund, which acquired about 2.5 lakh shares, representing 0.6% stake in the company in Landmark Cars. So very big transaction that has happened via a block deal on Friday. Keep an eye out on Landmark Auto Cars as well. Tata Power, meanwhile, the company has said that they've secured a letter of award from SECI for 324 megawatt. This is for providing energy storage services for the next 40 years. So it's a long-term contract. Tata Power in focus on the back of this. Alembic Pharma, and there's a positive news piece over here, where the company's partner, Natco Pharma, has received US FDA tentative approval for a drug. This will be distributed in the US, and Natco Pharma will be manufacturing it. So both Alembic and Natco in focus on the back of that. Meanwhile, let's also talk about two other counters which will be in focus on the back of regulatory challenges. One is Aarti Drugs, where Gujarat Pollution Control Board has directed the company to shut its amines manufacturing facility in Bharuch within the next 15 days. This is on account of non-compliance of several acts, including the Water Act. So the other stock that will be in focus is Amara Raja Battery. And over here, the Andhra Pradesh Pollution Control Board has requested the closure of the company's unit in Chittoor and Tirupati districts. Again, this is the company, of course, says that there will be no financial impact, but both these counters in focus on the back of regulatory hurdles. Lastly, let's also talk about Amagi Media Labs, where 56% lock-in will end today. So this counter will also be in focus, and perhaps we could see some bit of selling pressure on the back of this news piece.
All right, thank you so much, Ashesha, for joining us with that. But even the brokerages have maintained their bullish stance on RIL post a strong earning. The House of MK has hiked the EPS estimate on the stronger O2C earnings. To get us the fine print of that, my colleague Ashesha is joining us yet again with what the brokerages have to say about RIL.
Well, yes, most brokerage houses have maintained their stance and target price on Reliance Industries post the earnings, but of course it was a beat across all parameters. Retail, we did see some bit of slowdown when it comes to retail business, especially on a sequential basis, both revenue and EBITDA decline. But otherwise, O2C segment performance was very good this time around. We have Morgan Stanley, which is maintaining its overweight stance in the stock with a target price of 1803. They say June quarter beat expectations across all parameters. Fuel, refining and chemicals drove the beat this time around. Gross refining margins at 25% above mid-cycle despite crude premium headwinds was a big positive this time around. Goldman Sachs, meanwhile, has also maintained its buy stance. They're saying oil to chemical business grew by about 17% this time around on a quarter-on-quarter basis despite cost headwinds that the company faced. A refining outlook continues to remain constructive on the back of low inventory. Retail EBITDA margin compressed on the back of Geomart investment. Some of it was expected, but this was weaker than what the street was working with. And retail EBITDA is likely to double over a period of next 2 years. So this is a positive despite the weakness in the retail segment that the company reported in the quarter gone by. Meanwhile, MK has also maintained its buy stance. 1680 is the target price. They in fact have gone ahead and raised FY27 EPS estimates by 2%. And the management, of course, has reiterated its target of doubling EBITDA by FY29. And the management continues to remain constructive on the O2C business as well. Nuvama has also maintained its buy stance with a target price of 1765. So all in all, numbers were good. Management has reiterated its guidance for the next few years. That is another positive. But there have been no major changes to the target price or the stance by any brokerage house.
All right, thanks so much, Ashesha, for joining us with that. But let's move on then. Mayuresh Joshi says that the retail-focused businesses will keep doing well, while the market veteran Sushil Choksi says that the higher crude prices have translated into stronger refining margins, while the O2C segment has emerged as the key growth driver. Let's listen in.
So as I mentioned, I think O2C is reasonably very strong. Telecom is steady state. Retail has been a steady state performance as well. And therefore, I think the retail-focused businesses should continue doing well for Reliance over the next few quarters. And earnings should be far more consistent as we speak. When it comes to the oil and gas business, obviously, I think it will be dependent on what happens on the macro scale, both in terms of the refining margin thereof and how the movement probably is in terms of crude. For O2C, in general, I think, again, dependent largely in terms of how the spreads will move out, whether it's gasoline spreads, petrol spreads, or the ATF spreads, which have remained in favor so far. But even if it is normalized that to a large extent, it should be reasonably placed, looking at the list of options that Reliance probably possesses, giving it the edge in terms of reporting better margins. Last but not least, I think the new energy verticals and then the progress and the commissioning thereof will also probably lead to some element of rating as far as the overall equity is concerned. Debt in control, return ratio, specifically ROE is steady state as well. The stock actually performed well.
I think it's a strong revenue number led by oil and gas and current crude prices, which are turning into refining margins. As per the commentary, what I hear, because I don't have the result in my hand, looks like oil and gas may be a little weak, retail is a little flat to weak, and oil to chemical has done wonders for them, and the PAT is very visible, which seems very high from a perspective which you're looking at. So seems the market should get surprised from the positive side of results.
Let's move on then. The IMD has forecast active monsoon conditions across large parts of the country over the next week, with heavy to extremely heavy rainfall expected in several states. Mumbai's 7 reservoirs are now over 52% full, while a red alert has been issued for the 5 districts of Himachal Pradesh amid the risk of intense rainfall. Akanksha is now joining us with the tracker.
That's right. Mumbai has received a fresh boost to its water reserves after steady rainfall over the past 24 hours. According to the latest BMC data, as of 19 July, the stock of the 7 reservoirs supplying water to Mumbai has risen to 52.39% of the total live storage capacity. Now, turning to the weather forecast, the India Meteorological Department, which is IMD, has issued a red alert for extremely heavy rainfall in the districts of Himachal Pradesh on 20 July and 21st as well. The IMD has also forecasted active monsoon conditions are likely to continue over northwest, east and northeast India during the next 6 to 7 days. Heavy to very heavy rainfall is also expected across Assam, Meghalaya, Bihar, Punjab, Haryana, Delhi, Uttar Pradesh and Sub-Himalaya, West Bengal and Sikkim. Heavy rainfall is also likely over Gujarat, Konkan and Goa, Madhya Maharashtra, Chhattisgarh, Jharkhand, Odisha and Kerala. Now, if we take a look at the latest rainfall deficit numbers as per IMD. So as of 19 July, East and Northeast India continue to report a 35% deficit, Northwest India a 23% deficit, Central India 14% deficit and South Peninsula has the highest deficit at 27%. So overall, India's cumulative monsoon rainfall deficit now stands at 24% as of 19 July.
And while India's top private banks have delivered a mixed set of first quarter earnings, ICICI Bank has emerged the standout performer with a strong beat driven by healthy margins and low credit costs, while HDFC Bank missed the street estimates despite the resilient core income. Axis Bank reported a stable operating performance with softer margins, and Kotak Mahindra delivered an inline quarter with healthy profitability and asset quality. My colleague Mitali is now joining us with the roundup.
Rightly mentioned, so quarter one for the banking sector was an earnings estimate review which remained quite resilient, but what set the narrative was the margins front. Starting first with HDFC banks, we delivered a largely inline quarter with NII up nearly 7% and profits up 5% yearly. The key concern here remained the margin pressure with the NIM slipping to 3.26%. But the positive side was the lower provisions for this quarter, the strong asset quality and also the management's confidence that the funding costs are going to decline going ahead. ICICI Bank, that was a standout performer among the heavyweights of Nifty that set their results on Saturday. It beat the expectations with 12.7% growth in its NII and 16% profit growth. More importantly, it was the only major private bank to expand its margin sequentially while delivering the highest return on assets, underlying the strength of its franchisee growth with advances surging nearly 19.6% year-on-year basis. Now coming to Axis Bank, which reported a healthy 22% growth for this in the profitability front for this quarter, but the quarter was a miss as the NIMs fell sharply to 3.46%, leading to a weaker core operating performance for the bank. While provisions and credit costs remained benign and asset quality was broadly stable, the margin recovery that remains the key monitorable for Axis Bank. Moving now to Kotak Mahindra Bank, which delivered an inline quarter with profits rising nearly 26% on a yearly basis. It continued to lead on the fundamentals with its lowest NPA at 0.27%, supported by lower credit cost as well as the stable asset quality. The only disappointment for Kotak Mahindra Bank was the dip in its margins, with NIMs slipping to 4.53%, reflecting the impact of the softer rate environment. So overall, the key takeaway is that ICICI Bank, it remains the benchmark on profitability, while Kotak continues to excel on its asset quality. HDFC and Axis Bank will be closely watched for the pace and recovery of their margins. Back to you.
All right. Let's move on then, and before we shut shop on this edition of Market Cafe, let's quickly take a look at how the Asian market is shaping up at this point. Remember, Japanese market Nikkei is shut for the holiday today, but let's take a look at the other markets and how they are faring. S&P ASX 200 is trading absolutely flat. In fact, it is flip-flopping between the red and the green today. Right now, it is trading with gains of 6 odd points. We have Hang Seng that is up in a way 2.3%. In fact, the Chinese market is soaring in trade today. This Hang Seng is trading up 2%, and Shanghai that's trading with gains of almost 0.8% as we speak. And if you look at the implied start to Nifty, a very muted start is what we're penciling in. 22 points of a downtick is what we're expecting. But with that, it's a wrap on this edition of Market Cafe. I'll take a leave. Thank you so much for tuning in.